Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that were recently purchased by Steve Cohen's investment company, Point72 Asset Management. What makes these two stocks great is that they come with a dividend. So we're going to take a closer look at each of these companies, what it is that they do, and what analysts are predicting for their stock's future. Just before we get into that, this is your friendly reminder that if you enjoy today's video, please hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to tune in at 3 p.m. Eastern Standard Time for Richard Allen's Power Hour, where he'll catch you up with what's been going on in the market throughout the day. Now, with that being said, let's get right into our first company today, which is LyondellBasell. Trading under the ticker LYB, they're currently priced at $113.50 per share. They pay a quarterly dividend of $1.13 per share for a yield of 3.89% compared to the sector average of 1.55%. Their ex-dividend date just passed on June 4th, with the next payment coming up on June 14th. And you may notice in the bottom right here, they score a 9 out of 10 for an outperform ranking on the TipRanks Smart Score. LyondellBasell is a global chemical company and is one of the largest plastics, chemicals, and refining companies in the world. Every day, their employees work around the clock to reliably and safely deliver the chemicals, polymers, fuels, and technologies that advance solutions to our world's biggest challenges. They are the world's largest licensor of polyolefin technologies and the #1 producer of polypropylene compounds globally, of oxyfuels in North America and Europe, of polypropylene in North America and Europe, and polyethylene in Europe. Many of their materials go into products that people use in every day, such as food packaging, electronics, children's toys, and fuels. Their Circulen brand enables customers to deliver sustainable consumer products. Their Circulen Recover is polymers made from plastic waste through a mechanical recycling process. They have Circulen Revive, which is polymers made by converting plastic waste into feedstock to produce new polymers using a molecular recycling process. And Circulen Renew, which is polymers made from renewable feedstocks such as used cooking oil. Their materials and technologies are advancing solutions in food safety and access, cleaner air and fuel efficiency, clean water, sustainable and modern living, quality healthcare, and agricultural efficiency. Now, like many companies, LyondellBasell saw their business dip and revenues fall during the pandemic, but those revenues have been on the rise for their last 3 quarters. And in their most recent quarterly earnings report, they reported revenue that was the highest it's been in the last 2 years. Their net income came in at $1.1 billion, with an EBITDA of $1.6 billion. Earnings per share came in at $3.18, also the highest in the last 2 years, and far higher than the 42-cent earning per share recorded 1 year ago. The company also repaid $500 million worth of debt in both January and April of this year, part of a concerted plan to fortify the balance sheet. On top of this, they were also able to increase their dividend by 7.6%. In the first quarter, Point72 picked up about 42,000 shares of the stock. Now, this was a new holding for Point72, and it puts their current holding at about $4.8 million. One analyst covering the stock is Jeffrey Zekauskas from JP Morgan, and he writes that domestic PE outages, rising oil values lifting Asian PE values, good demand in China increased opportunities for North American producers to ship PE to Asia because of rising global shipping costs and logistic issues, and continued good domestic demand have led to a snug market. We expect the company to continue to pay its approximate 4% dividend and generate an attractive free cash flow yield above 10%. He rates the stock a buy, and with a price target of $142, he'd be expecting an increase of 25% for this next year. Now, there are 10 other analysts that have ratings on this stock, and it does come in as a moderate buy. We have 6 buy ratings and 5 holds, with an average price target of $123, which would be an 8.5% upside potential. Jeffrey's price target is the highest on the list, with the lowest being a hold from S.A.C Capital 1 month ago with a downside of 4%. The most recent rating is a hold rating, but still a $125 price target, which would be a 9% upside. The second dividend-paying company on our list today is OneMain Holdings. They trade under the ticker OMF and are currently priced at $59.63 per share. They pay a quarterly dividend as well at 69 cents per share, which comes in as a dividend yield of 4.71% compared to the sector average of 1.78%. They just had their payment date back in May, so we'll expect the next dividend this summer. And once again, we have an outperform rating with a 9 out of 10 on the TipRanks Smart Score. As you can see, the company has also paid special dividends in the past as well, most recently in February of 2021. OneMain Holdings is a holdings company whose subsidiaries offer consumer lending products to retail customers who can't access conventional banking and credit products. These are customers who have, for whatever reasons, maybe poor credit histories, but aren't necessarily poor risks. OneMain offers them a range of financial services, including consumer finance, insurance, and personal loans. Their loan specialists work with their customers to develop a monthly budget, empowering the customers to choose a loan that works for their individual situation and helps ensure that they can repay their loan successfully. Their vision is to be the lender of choice for the near-prime consumer, solving their current needs while enabling progress towards a better future. Their hybrid operating model, including leading digital footprint and national branch network rooted in local communities, helps offer a diverse product suite of unsecured and secured loans, as well as insurance and other optional products. They have served over 15 million customers, with about 85% of new customer applications beginning online and 50% of consumers doing business with them at least twice, making them the largest near-prime lender uniquely positioned to serve their customers. In their most recent earnings report, their top line came in at $1.2 billion, and it has been at that or higher for every quarter since the third quarter of 2019. Their most recent earnings per share came in at $3.06, which was up strongly compared to the 23 cents reported in the first quarter of 2020. The company felt confident after this first quarter and announced an increase in its regular quarterly dividend by 56%. Point72 started a new position in OneMain Holdings during the first quarter, purchasing over 813,000 shares, now worth about $48 million. One analyst covering the stock is Moshe Orenbuch from Credit Suisse. He says that we expect OMF's balances to grow sequentially in the second quarter. We believe consumer demand for OMF's products has been less impacted by the stimulus than other non-prime lenders, given larger loan sizes at OMF. OMF expects to be profitable even in a downturn and has significant and increasing capital return and multiple growth initiatives while shares trade at a cheap multiple. He rates the stock a buy, and his $72 price target would be a 20% growth potential. Now, there are 9 other analysts with ratings on the stock, and this one comes in as a strong buy based off of 9 buy ratings and 1 hold, with an average price target of $66.10, which would be a 10% upside potential. Now, Moshe isn't alone with his $72 price target, as Barclays also reiterated the same price. On the low end, we have a hold rating from BMO Capital from 2 months ago with a slight downside. So there are 2 stocks recently purchased by Steve Cohen's Point72 Asset Management, both paying a dividend and analysts believing having some upside potential for this next year. Now, please leave your thoughts in the comments down below on these 2 stocks. Are they one that were on your radar before, or are these new to you? I always love hearing from you guys. And keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for entertainment and information purposes, so please always make sure to do your own research and due diligence before making any investment decision. Thank you guys so much for watching. I hope you have a fantastic day, and we will see you back here next time.